In the trading world, there are legends, and then there are myths, but only one story is both. This is the story of a man who predicted the greatest stock market crash since 1929, made over $100 million in a single day while the rest of the world burned, and then spent 30 years trying to erase the documentary that captured it all. This is the story of Paul Tudor Jones. On October 19, 1987, the Dow Jones Industrial Average fell 508 points, a drop of 22.6% in a single day. It was the largest one-day percentage decline in history. Fortunes were wiped out. Careers were destroyed. The financial world was in chaos. But in a trading room in Greenwich, Connecticut, one man was celebrating. Paul Tudor Jones had just made over $100 million in a single day, and he had seen it coming. But to understand how he did it, we need to go back to the beginning. Paul Tudor Jones II was born in Memphis, Tennessee in 1954. His father was a lawyer, his grandfather a cotton trader. From an early age, Jones was competitive, aggressive, driven. He boxed in college, and that fighter's mentality would define his entire career. "I learned early that you have to be willing to take a punch," he would later say. "But more importantly, you have to know when to get out of the ring." After graduating from the University of Virginia, Jones landed a job as a clerk on the New York Cotton Exchange. He was 22 years old, hungry, and convinced he was going to conquer the world. Within months, he was trading his own account. Within a year, he was fired. His boss at the time, Eli Tullis, caught Jones sleeping at his desk after a night of partying. Tullis fired him on the spot. It was a humiliating moment, but Jones would later call it one of the most important lessons of his life. "I learned that the market doesn't care how smart you think you are," he said. "It doesn't care about your ego. It will humble you, and if you don't learn from that humiliation, it will destroy you." Jones took the lesson to heart. He moved to New Orleans, started trading cotton futures again, and this time he was different. He was disciplined. He was humble. He was obsessed with risk management. By 1980, he had founded Tudor Investment Corporation with $1.5 million in capital. Within 7 years, that would grow to over $100 million. But it was what happened in 1987 that would cement his legend. In the mid-1980s, Jones became obsessed with a chart. It was a chart of the Dow Jones Industrial Average from 1929, the year of the Great Crash. He noticed something remarkable. The market in 1987 was following an almost identical pattern. The same euphoria, the same overvaluation, the same dangerous complacency. Jones overlaid the 1929 chart onto the current market. The correlation was eerie. If the pattern held, the market was heading for a catastrophic crash sometime in October 1987. Most traders would have dismissed this as coincidence. "Markets don't repeat exactly," they would say. "The fundamentals are different. The economy is strong." But Jones understood something that most traders don't. Markets are not driven by fundamentals. They are driven by human psychology, and human psychology doesn't change. "The market has a memory," Jones would later explain. "It remembers the patterns of fear and greed that have played out for centuries. If you can read those patterns, you can see the future." Jones began positioning for a crash. He bought put options on the S&P 500. He shorted stock index futures. He reduced his long exposure to almost nothing. His colleagues thought he was crazy. The market was at all-time highs. The economy was booming. Why would anyone bet against that? But Jones was not predicting. He was preparing. "I never try to predict where the market is going," he said. "I prepare for multiple scenarios. If I'm wrong, I lose a little. If I'm right, I make a fortune." In the summer of 1987, a documentary film crew was following Jones around. The film was called Trader, and it captured Jones in his element, intense, focused, utterly convinced that disaster was coming. In one scene, he points to his 1929 chart overlay and says, "This is it. This is the setup. We're going to have a crash." The documentary would become one of the most sought-after trading films in history, but not because Jones wanted it to be. We'll get to that later. On October 19, 1987, Black Monday arrived. The market opened down and kept falling. Panic spread. Trading systems were overwhelmed. By the end of the day, the Dow had lost 22.6% of its value. It was financial Armageddon. But in Jones's trading room, there was no panic. There was only execution. Jones had prepared for this moment for months. His positions were perfectly aligned. As the market collapsed, his puts exploded in value. His short positions printed money. By the end of the day, Tudor Investment Corporation had made over $100 million. Jones himself made $80 million in a single day. It was the single greatest trading day in hedge fund history. But here's what separates Jones from the lucky gamblers. He wasn't just betting on a crash. He was managing risk every step of the way. "I had stop losses on everything," he explained. "If I was wrong, I would have lost maybe 10%. But if I was right, I would make 10 times that. That's the kind of asymmetric bet you want to make." This is the psychology lesson that most traders miss. Jones didn't predict Black Monday. He prepared for it. He created a situation where being wrong cost him a little, but being right paid him enormously. That's not prediction. That's preparation. After Black Monday, Jones became a legend, but he also became intensely private. And he did something that puzzled the trading world for decades. He tried to suppress the Trader documentary. Jones bought up every copy he could find. He threatened legal action against anyone who distributed it. For years, the film was almost impossible to see, trading hands among traders like a forbidden text. Why would a man who had just made $100 million try to hide the evidence of his greatest triumph? There are several theories. Some say Jones was embarrassed by how young and brash he appeared in the film. Others say he didn't want competitors to study his methods. Still others suggest he was uncomfortable with the attention, preferring to operate in the shadows. But there's a deeper psychology at work here. Jones understood something that most people don't. Your narrative is your power. By controlling the story, he controlled how people perceived him. The mystery of the suppressed documentary made him more legendary, not less. People always want what they can't have. Control what you can control, Jones has said, and one of the things you can control is how people see you. Now let's talk about the rules that have made Jones one of the most successful traders in history. Rule number 1, play great defense, not great offense. This is Jones's most famous principle. The most important rule of trading is to play great defense, not great offense, he has said repeatedly. If you make a good trade, don't think about how much money you made. Think about how much you could have lost. Most traders focus on winning. Jones focuses on not losing. It sounds like the same thing, but it's not. When you focus on winning, you take risks. When you focus on not losing, you manage risks. The difference is everything. Jones uses the 200-day moving average as his primary defensive tool. If a stock or index falls below its 200-day moving average, he gets out. No questions asked. No hoping it will come back, just out. The 200-day moving average is my line in the sand, he explains. I don't care what the fundamentals say. I don't care what the analysts say. If price is below the 200-day, I don't want to own it. This rule has saved Jones countless times. It kept him out of the 2000 dot-com crash. It protected him in 2008. It's not a prediction tool. It's a survival tool. Rule number 2, losers average losers. This is one of the most counterintuitive principles in trading. Most people, when they're losing, add to their position. They think, it's cheaper now, so I should buy more. Jones thinks this is insanity. Losers average losers, he says. If you have a losing position, the last thing you should do is add to it. You're just throwing good money after bad. Instead, Jones does the opposite. When he's winning, he adds to his position. When he's losing, he cuts. This goes against every instinct most people have. But it's why Jones has survived for 40 years, while others have blown up. The pain of being wrong is temporary, Jones says. The pain of staying wrong is permanent. Rule number 3, manage your volume. Jones adjusts his position size based on how well he's trading. When he's on a hot streak, he increases his size. When he's struggling, he decreases it. This seems obvious, but almost no one does it. When I'm trading well, I'm in sync with the market, he explains. I should be pressing my advantage. When I'm trading poorly, something is off. I need to reduce my risk until I figure out what's wrong. This is the opposite of what most traders do. Most traders increase their size when they're losing, trying to make back their losses. This is how fortunes are lost. Beyond trading, Jones has become one of the most influential philanthropists in finance. He founded the Robin Hood Foundation, which has raised billions of dollars to fight poverty in New York City. He's donated hundreds of millions to education and conservation. But even his philanthropy reflects his trading philosophy. I approach giving the same way I approach trading, he says. I look for asymmetric opportunities. Where can a small investment create a huge return? Paul Tudor Jones is now in his 70s. He's been trading for over 40 years. He's survived crashes, crises, and countless market cycles, and he's still going. His legacy is not just the money he's made, it's the principles he's taught. Play great defense, cut your losers, manage your risk, prepare, don't predict. In a world obsessed with prediction, Jones reminds us that the real edge is preparation. You can't know what the market will do tomorrow, but you can prepare for whatever it does. And if you prepare well enough, you might just make 100 million in a single day. The Trader documentary is now widely available online. Jones eventually stopped trying to suppress it. Perhaps he realized that the legend had grown beyond his control. Or perhaps he simply accepted that some stories are too powerful to contain. Either way, the film remains a testament to one of the greatest trades in history. A dancer's son from Memphis who saw the future in an old chart and had the courage to bet on it. That's the story of Paul Tudor Jones, the man who predicted black money.